Good morning, good afternoon. Hope everyone's well. Just let me know if I'm coming through loud and clear. All systems are go. Thanks, Rory. How's everyone doing? Who have we got? We've got Rory, we've got Matt Sat. Morning, how are you, Sharper? Good to see you again. We've got Zane. Good on you, mate. Good to see you. We've got Mark It Up, dude. B-Fits. We've got Benji, Goldjar. Thanks for tuning in. It's great to be back on the webinar again. My name's Tim Fairweather. If you haven't been on one of my sessions before, I'm another one of the fantastic Books Trading Course presenters. Super modest. No, but it's I'm an Aussie. I'm a price action trader. I'm based out of Taipei, and hopefully I can pass on some price action knowledge, help us get some good trades today. It's great fun hosting these sessions. I like all the questions, and it's good to see. I like watching all the other presenters as well, so many different styles, so it's good fun. Okay, cool. Some dude, fantastic. How'd we go yesterday? Am I sharing the right screen? Let's just double check. Yep, nice. That's good. Yesterday was interesting. Who listened to our yesterday? I like our sessions. I always learn new things on our sessions. So, hi MLJ. Just let us know if it's anyone's first time. I know we've got a lot of new people that just joined. We did a promo day the other day. We're hoping to get some new people in the room. So, yesterday was interesting because we had a big gap up, and what tends to happen with a big gap up is that you get a couple of things. The first is you can read it like a giant bull bar here as a gap up, or if it's a gap down as a giant bear bar. And that creates a big spike. And when you get a big trend bar, traders are put into this position where if they want to go in that direction, they've got to take big risk and trade small. So some will look to enter as soon as and look to add on or scale in lower, and others are going to wait for a follow-through bar. And if you go back through the charts, I like to use TradingView just because it's very easy to draw, and there's loads of free indicators you can get and they help you do research. But when you get a couple of bull bars on the open, it creates a couple of targets. So you have the measured move of the first two bars, which was up here, which we reached. You didn't quite reach on 19, just about. Maybe I should draw it like that. And then the other one it sets up is a swing target. And I think we just went short of it. I think we got it later in the day. Yeah, we did. So we had a 1-to-1 and we had a 2-to-1. But at the time when these bars were printing, like it's really easy in hindsight to draw that up. At the time, it doesn't always look like that. So if I go replay, just to make this larger and make my A smaller. Where's my replay button? So at the time, you're put in this position where, okay, in order for me to buy or sell, I need a huge risk. Okay, where am I going to put my stop? So if you're buying up here, your stop's massive. Your stop's basically an ATR. Alternatively, you can look at this move and say, here's 50%. I'll wait for it to pull back to 50% or maybe 30% and look to get a pullback, because this will be spike expecting a pullback, and that pullback usually has two legs. So we have 1, 2 that creates the high 1, high 2, and then looking to buy. Unfortunately, trading is rarely that simple on the open. Everything's very compressed. So we had a couple of good bars on the open, and then we triggered in the stop entry traders up the top there. Now, a lot of the traders who got triggered in there are using a small position, and they're very comfortable with this pullback. They know there's a really high probability that this is going to at least come back to the low of 1 if it goes below, or at least come back up to the midpoint of their entries. But it puts them under a bit of heat. And then we were hoping the bears were going to get something there. And then we've got 4 bull bars. And it creates a bit of a triangle. So the bears didn't get their breakout. The bulls don't have a breakout. But probability-wise, better to be long or looking to get long. So I think the only sell I had all day was this one, because I thought there's probably some traders who were a bit confused with bar 3 and might panic that we're going back to the moving average. So I was just selling up in the top third of that outside bar, and then I only got 1 bar out of it. I was thinking of holding it, and I thought, oh no, it looks really good, but I might get out, and it was lucky because it kind of turned around almost immediately. So at this point, we've had spike up, and if you imagine that's a big bull bar, we've got pullback 1, pullback 2, and then a good signal bar. Now, if this was located a little bit closer to the moving average on the open, then it wouldn't be a good buy, in my opinion, because usually when things are sideways, as Al says, when price is above average, you want above average looking bars, and we're still compressed in this range. But that was a good buy. Other traders, the bears, were trying to get out there, and that's why I had a doji to follow. But because 11 didn't close on its low, it wasn't a good second entry short, and the bears all got out. So it was an interesting day, I thought, because we already had one of these days before. We had a spike, pull back, and then a second leg, and we actually had one earlier in the week. So we've had a couple of those. The bears nearly got something happening in the middle of the day, but anyone that bought here, oh, sorry, 22, that was what I was going to say. 22 was a bit scary. I had a limit order sitting at the high of 3, which didn't get filled, which was a shame, and I was just kind of working out to myself, here's a tight trading range. I'm probably better off putting it somewhere there. And before I had time to do everything, it dropped down, shot up, and then I was like, oh, I don't really want to buy back up in the middle, so that was a bit of a shame. But I had a few more opportunities here. We had high 2 of the moving average, a couple other things. So how about we go high time frame, huh? I won't spend too much time on the high time frames because all the other presenters do lots and lots of work on it, so you guys have got plenty of examples for you. Basically, we're on the monthly moving average, and it's trading range price action. Huge bull spike. We had a couple of legs sideways to down, wedge bull flag, and then we formed a triangle. We broke up, then we came back to test, and we're back at the moving average. So we might go sideways here. I think with such a big spike to go up, we're thinking we might go a little bit higher, maybe back up to 4,400, maybe 4,500, back up in here. But I think there'll be still more of this to come up here as well. So we're only on the 3rd of the month, and we've already done a bit of damage. So coming up to the weekly moving average, I might just mark that on the chart anyway. So we've got that one. It's at 43.75. If you ignore that sideways stuff here, big up, big down, confusing, lots of overlapping bars down here. I thought we'd spend a bit more time down here, around 4,200, but such a big bar now, thinking to yourself, well, here's the buy zone of that bar. Any bears that sold are looking to either cover or exit. So we've got a magnet on the high of last week. Let me just make sure I've got that. The magnet there. What's that? 42.90. So that's the bears in that color. But on the weekly chart, it's tricky to buy up here because you're right next to the moving average. Context, you can say a couple of pushes down, 1, 2, 3, but not a great signal bar to buy above, but great context to get long, you can trade small and look to scale in. So had 41, using the bar numbers on the weekly. Let me just remove that, make it more simple. Had the week of 16 October gone above that bull bar, that'd be better for a trigger, one buy move, and then a second buy. So expecting maybe sideways to up here, we might pull back to the breakout point on the weekly. On the daily, it's just absolute rocket ships. We've got a lot of gaps. We've got a gap here, we've got a gap there, and then we've got some overlapping. Just get the, that's the Globex. That's better. That's today's session. So very strong move up. If this is a trading range, we're coming up into the sell zone, but there's no sell signals yet. I thought there might be a couple of bulls stuck around here. I think it's a bit clearer on the Globex. Oh, still a little bit confusing. Sideways, the moving average moved down, and now we're coming back. So I think targets, weekly moving average, back to that tight trading range, but we might be one leg pull back and then second leg. Al was talking about last night, wedge 1, 2, 3. We should get 2 legs sideways to up. And his rule is usually about as many bars as that wedge. So 60 bars, so that's going to be 30 bars. So how's that going to look like? 10 up, 5 down, 10 up, 5 down, something like that. But the magnets test the high of the last sell climax. So up here, 4,400, that's obviously a magnet up there as well. Put that on the chart. So we've got that. So hourly chart, we've gone parabolic, we've gone crypto up in here. So usually when price has a bull channel and then breaks out of it, a couple of things likely to happen. One is, very rarely can this form another bull channel and keep going up. Most of the time it breaks and then goes sideways and then comes back into the channel. The other possibility is that channel flips, kind of upgrades a level. So if I put that there, I'm going to use the moving average. And then we get this kind of pattern. So which is like, if you look at a trading range which is horizontal, we've got a channel which is that trading range, and we've just moved up to the top. And what it's doing is it's hugging the top of that line up there, trying to find where the next layer of resistance is. We've got a bit of resistance around this level here, back from the 14th of October. So a couple of areas up there. It's a breakout point. But who wants to short 7 bull bars? Not I. So we'll see what happens, at least on the RTH. So that could be what might be happening here. If there's no more buying, so we go from buy the market to buy a tick above the high to buy the close to buy the pullbacks. And so the expectation might be a couple of legs sideways to down to create the bottom part of that channel. So spike, pullback, and then we're looking for the channel. And if we go to the Globex, it's handy when it works. So spike up, sideways back to the middle of that channel, and then we're finding that other area. So even though the lines don't match perfectly, you only need one of the charts to trade. But we're still forming that channel, and I'd be surprised if, that's not where we try and get to. Might not be today, might be next week. This was on news, I think it was non-farm payroll, which just came out before. So the risk for the bulls now is bull channel, and now we've got repeated buy climaxes, 1, 2, 3, 4. If 80% of reversals fail in a trend, by the time we get the 4th and the 5th one, the odds go much higher for a swing the other way. I'll just take those off for now. Instead of clogging up the chart with channel lines, you can also just use the moving average. That's the line, that's what computers will look at as well. And it's above 45 degrees, so it's a tight bull channel. Better look to buy, and if you can, look to fade any kind of pullbacks. Very tight trading range, and then we've broken out of it. So this was the breakout point on the hourly chart that we just looked at before. Trouble breaking through this area. Doji up, doji down. This is a common pattern you see when the market's forming a flag and it's running out of momentum. Let's see if I can find some others. So flag here, up, down, sideways. We usually come and test. 1, 2, test. Up, down, sideways, down, test. So that could be a magnet for us later in the day. Nice. Hi Molabar, did the sound work on the internet? That sorted itself out. Awesome, good to hear. Hi Pierre. I got some questions on Discord, which was nice, and it was quite a big question, and I started writing a big answer, and then I was like, no, stop. What I'm going to do is think about it and see if I can come up with a simpler answer. He was talking about profitability, and I wrote, a short story on it, and then realized that was pretty useless, so I put it on a slide. I thought that was better. Let's have a look. Let's get rid of that, get rid of that. Great, we've got 15 minutes to open. Awesome. I'll go through some of that. Would that be interesting to people? Ideas on improving profitability? Otherwise, I've got some slides I want to go through on the encyclopedia. Jeff Bezos doesn't believe in PowerPoint. I like his management style. Hey, he said teams should be, the largest teams should be able to be fed with 2 pizzas. Any bigger than that, team's no good. And I've got to agree with him. Mate, he's ridiculously successful. Have you seen their the Amazon centers? And this lady's being interviewed, and they're just kind of putting the stuff everywhere. And they're like, "How do you organize the stuff?" And they said, "Actually, we just put stuff up in random because the robots are so fast at getting it. When we organized it into categories, alphabetical, they were slower." So, okay, let's see if I can get this slide happening here on this screen, and then we go present. All right. So foundation level, I thought a couple of things. If you're looking at the chart, what's the always in direction? And it seems simple, but when you first start the course, it's near impossible. It's super confusing. And one thing that the guy that was asking the question had trouble with is the moment it switches to always in, have you noticed how it pulls back? 90% of the time. So even if you take that trade, you can get shaken out immediately. So one of the other ways to enter is to wait for always in to switch, wait for the pullback, and then it gives you a little bit more comfort. And I was saying if you had trouble with always in, you're looking at higher highs, higher lows, lower highs, lower lows. Or if it's not doing that, it's a trading range. And that's something that Tim spends a lot of time doing on his sessions. So if I go back to, this was fairly easy to work out always in because we had gap up and we had follow through. That's always in. So 2 legs sideways to down above the moving average, it stays always in. And we never got below the low of 1. And then we've got bull spike, pullback. Now we've got a bull spike and channel above the moving average. So very rarely can this get always in short up here. For it to get always in short, we need to go below the moving average. But the first time the market does that in this environment, it's a buy zone, and that's why we never were able to get there here. Other days is a bit different. Here we had gap up and a bear bar, a bit confusing. Now we've got 3 bull bars, 1 big, 1 closing on its high. So we're always in long. As soon as we went always in long, we pulled back, and then we've got 2 more bull bars. So it's buy the market, buy the close. You get a huge profit bar like that. I'd usually click thanks very much or take most off because it's 3 bars in one direction. It's a huge profit, and this is sideways. So I want to get out of my trade before it starts going sideways again. And you can see a lot of people did the same thing. We got 2 bear bars below the moving average, but this is not really always in short. You can argue double top. You can argue wedge, 1, 2, 3. You can argue low or high. Many different ways to argue it. Basically, there was profit taking. We went back to the moving average, and the bulls never got anything here. So it's kind of by default always in short. We went always in short, pull back, and then you can sell. So Where's a more confusing day? Well, this is more confusing here. So you've got gap up always in long, 3 bear bars. So to me at this point, it's trading range. They shouldn't have got this bar, and then they certainly shouldn't get this bar. So at this point, and you can kind of see when you're looking at the chart at the end of the day, when you have bars that have almost no overlap, this is when it was clearly always in short. So you can kind of use that to train yourself to see it real time. So we're bullish. I'm waiting for a pullback, first reversal. That's not the bar I want to see. I need to exit. I won't let my stop get hit. And then let's go back to that. So that was one. And then he was looking, talking about profitability. So as Al says, you know, we've all taken really good trades, and that's great. Problem is all the rubbish trades that we take and the time we spend doing the opposite of what the market's doing. So I had some rules for myself, which really helped. And some of these I still continue, depending on the day. First one was watching the opening 6 to 8 bars. Yes, there are big moves. Yes, there can be trends from the open, but overwhelming majority of days, you're not missing anything in the first 5 bars. But by 6 to 8, between 30 minutes and the first hour, a swing usually sets up, and it's usually clearer after that. Only trade in the always in direction, and if you're not sure what that is, then you just wait. Don't take reversals. I know they're kind of the same thing. It's just a reminder because that was one of my favorite trades, and I could always remember the ones that worked and conveniently forgot all the ones that just decimated my account. Keep it simple. Only take stop entries. Buy above bull bars, sell below bear bars. Keeping it nice and simple. If you can, take a second entry. And that means you've got to deal with the emotion of, I'm going to miss something. I've been waiting for 45 minutes. It's time to trade. You've got to be able to see through all those emotions. They're going to make you get in, panic, stress, and by the time those entries set up, you will hesitate and you miss the good ones. The better entries, the bull bars are above the moving average, the bear bars are below the moving average. And Al takes a lot of these. Al is super patient. You know what I mean? Like he can wait for 2, 3, 4 hours before scaling into a very clear trend. So that's why he's so relaxed, I think. Only use good signal bars. Is the body small? Is the tail big? If it's questionable, let it go. If they're outside bars and inside bars, just ignore them, just wait. The reason is these have a higher frequency of pulling back. Outside bars have 2 breakouts, so we break out up and down, and inside bar has no breakouts. And what usually has to happen is the market is testing the highs and lows. On these bars, the market's got to test both. All right, if we get a bull bar, the market usually just tests above it and finds buyers. And if it's a bear bar, it tests below it and finds sellers. But with these, we usually go up and down, and that can be a bit confusing. I'll just pause on that. And we've got 5 minutes to go. So let's look at. Yesterday was a bit more simple. So here, ignore the first 6 to 8 bars, and then we've got consecutive bull bars above the moving average. Okay, so these are buys. This is still a buy up here, although the buy is actually down here. This is more where everyone's getting out. Here's a good-looking bear bar, big tail, but above the moving average. So under that system, you just ignore it. But this is a good first leg. So by the time we get to 2 bear bars below the moving average, this is now a good sell. And if you draw a line at the end of the day, you'll see that they resist breaking. When it switches to always in short here, we resist breaking. In the same way, when it switched into always in long, it resists breaking. So even that first pullback here, a lot of traders won't panic, they'll just buy more. But they're increasing size and doing other stuff, but you can keep it simple. Here, good bull bars, ignore 6 to 8 bars. 1, 2, 3, 4, 5, 6, 7, 8. We're here. Bear bars above the moving average, let them go. Good looking bear bars below maybe you got stuck here. It's too many bars down, but that's okay. As soon as you get a bull bar like this, you need to exit. Now you've got big tails after a big move down. Ignore. Now you've got bear bars with the moving average. You're basically sitting through all this until you get this stuff. So that's why I call it the kind of patience trading, because these were the clearer trades of the day that were nice and simple. And so what I've learned from Al, from being in the trading room, is he'll wait for this stuff. And he'll sit through and wait for a second lead or a third lead. So let me know if that was useful. Yeah, if that was handy, I can put the slide back up and I'll try and explain it more during the session, but I think that might help bring some confidence. You can increase the size of the trades. Nice one. Reversal trade. So a reversal trade is, you need to break a trend line first, right? So you might argue, oh, we've broken a trend line. This is a test, and that's a bear bar to sell, right? Someone might argue that. It's not a great place to sell. There's only been 3 bear bars, and this is incredibly bullish. This is not something to sell. So that's why I say not to take reversal trades initially, because it gets confusing, because this line is imaginary, and I can draw it anywhere I want. And in 5 minutes, I can draw about 50 lines. But at the end of the day, it's pretty clear. That broke a trend line, but really, if I'm a limit order trader, I haven't been able to buy until here. So a limit order trader looks at that and says, that's my first entry. This spike is going to create a channel. My stop's down here. Anything down in here is a discount. So the bears got stuck there. Bottom third of a trading range. They're happy to scale in here. And this price was a magnet. We oscillated around it. So I think drawing trend lines can be confusing initially, at least they were for me, because I'm looking for a reversal when I should ignore the trend line and go, I'm in a bull trend. The next phase is a trading range. So I'm not looking to sell these pullbacks. I'm looking to buy somewhere. Here's pretty high. Here's pretty high. Okay, here's back at the moving average. It's probably okay. Please put slide up. Sure. Let's do that. Oh, sorry. Let me just do that. So I have to click through. So you can take a screenshot, or someone can drop it in. And I'll talk more about the limit order trading afterwards. You know what? Why don't I just screenshot it and put it in myself? Oh, thank you. Beat me to it. Well done. Thanks, Lyndon. Much appreciated. Okay, so let's get the ETH. So the ETH hourly, and we'll get the ETH 15 minutes. Get some Globex highs and lows. So we're right up near the Globex high. That's bullish. We are absolutely miles from the Globex low. I have to change the, what's it called, scale list. So big gap up. How big is that? 40%. So 26 points, 40% of the average daily range. So it's helpful to, I think, have an idea of this on the open, because it gives me an idea of what an opening swing might look like. So it sets up a couple of targets. That purple line just there is 50% of the gap. And I like to have that on the chart, because that lets me know if this is a bull spike, I've got to be careful about shorting down here, because it might be that traders are waiting for the pullback to get long. And then above, that's a measured move of the gap up there. So bullish price action, 30 points. Where do you put your stop if you're going to get long? You need to trade very, very small, and your premise is we're going to rocket up to measured move of the opening range. We're in a bull channel. It's a very aggressive bull spike, very tight, small pullback bull trend. It's rare for bull channels to get bull breakouts, so I'm going to put that channel line up there. This can just rocket up all day, but if it doesn't, then that's going to be a magnet usually, the top of that channel. Cool, Moose, what's that cool screen with all the measures? Oh, you mean the this one? It's just a gap open indicator I wrote with trading it with, what's it called? ChatGPT, my best friend. Send me a message. I tried to post them on TradingView, but TradingView knocked them back, saying they weren't sufficiently, you know, what's it called? They weren't different from other indicators. But I think I can make it private, and then I can just post it, and then yeah, it just measures the gap, and the other ones are just open, high, low closes. So, can we structure a trade here? Well, very strong bull move, bull breakout, but dojis. So I'm a little bit concerned with buying very high with that there. Let's see what the first couple of bars are. Sorry, somebody, what's MOD? Oh, yeah. Well, man, it's just automated as well. They just sent back all these paragraphs, and I tried to write a message, and then they send back a, you know, personalized message. I'm like, man, I don't have time to read 6 pages. Oh, hi, Rose. What's happening? I thought you were at the beach. Beach on your day off. Does Jersey have beaches? Off asking. Off asking. So we've got our 2 targets. We've got Globex high, Globex low. 90% chance of hitting either. And we're currently trying to close above it. Yesterday was interesting because bar 1 was the low of the day, and that happens about 20% of the time. I went back and measured a lot of those stats that Al puts in the course because it kind of helps you get, you know, rely on them a bit more, and I came up with the same thing. I did 2 samples. One was 20%, one was like 24%, but it's rare. And that means if the odds of that being the low of the day, high or low of the day, only happen 20% of the time, then you need 4 to 1 when it works. You know what I mean? So, and if you go back, funnily enough, in the last month, there's actually been quite a few. A surprising amount. We had one on Tim's session the other day. Just Tim's session? 30th? Maybe that was Rose's. Looked like it was going to be, sorry, not that one. Yeah. This one, 26. Yeah, that was the high of the day, bull bar. And then, yeah, we had 2 in a row. So when you think about the probability of a trading system, you know, you've got to sit through loss, 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 and then you get two 4 to 1s day after day. And you sit through a whole bunch of losses. So some dude, because of the risk of ruin. Let's get, I've even got that on the slide. Here we go. So this is a risk of ruin table. I've just blanked out the numbers. It didn't make any sense. Like, they were just ridiculous. So if your hit rate's 20 to 25%, you've got 100% risk of ruin here going for 3 to 1s. Like 100% you're going to lose money. So you need 4 to 1s. And you might survive on 3 to 1s. But, and that's why a lot of traders use 3 to 1, because if you think about the trading probabilities, everything sits between 40 to 60% most of the time. And you can see that it's all green here, which means if you only go for 3 to 1, you can basically buy or sell anywhere, and as long as you don't close early, you'll make money. So we can put that to the test. I'm not recommending someone trade this style. It's like coin flipping style, but so 3 to 1 you lost. 3 to 1 you lost. But all of these, well, you know what I mean? So if you went through and actually did that all day, then at the end of the day you'd be profitable. Bar 1, big tail on top, but bull bar. So some traders will look at that and saying, we're accepting the gap, but sellers above. At the conference last year, Ali was explaining how the first bar often looks like the whole day's trading. So, which I'd never actually noticed, I thought it was kind of funny. So this is what today might look like. Move up, sideways, and move back. But I think we'd have to include the Globex on that one. So potential trading range with a bullish bias. We should get a tradable move up in the first hour or two. If there's a gap up, so usually a gap up, pull back, two-legged or three-legged, and then an up move, and usually some kind of resumption in the afternoon. I'll ignore yesterday because it was just up from the start. Here we had a tradable move up on the open and then later in the afternoon, although that was news, so let's ignore that one. Get rid of some here. Here we've got gap up. We had a tradable swing up here, but a lot of traders won't get on in already there, but you know, we had a low of the day here very early on. So. And then the opposite for a gap down. Gap down, tradable bear leg. Sometimes it comes early, and that's the counter argument for not trading. If you miss the first 6 to 8 bars, sometimes you can miss that. But my counter argument is this. This usually happens later on. There are sells at the moving average. So that's the cool thing about trading. Many, many different styles can all commingle. What do you do here? Nothing to really do here. Market's trying to see what's above 1. Because there's a 20% hit rate on bar 1 being the high or low of the day, that means that it's a profitable strategy to fade bar 1 if you're a computer. So one of the things I look for is to see if those computers on bar 1 made money or didn't make money. And so 2 is an inside bar, so we need to probably go above and below to see what's there. So a lot of traders here will sell 1. So big bull bar, huge gap up. And that's why I say computers do it, because it's pretty difficult to hit that button. So you're selling bar 1. And then you've already made a scalp there. So they're probably not going to sit through a second leg. But if you get stuck, so this was a good trade. I think this was Tim's session. Traders selling the first bar and they get stuck and they have to sell to cover. So if we go back here, they're selling the first bar, and then this happens, and they need to sell again to get back to their price. I wouldn't usually scale in with that kind of bar, but I think they needed to get out, so we'll do it for comparison there. See how it went to 50 bucks? See how it went to 1 point? And TradingView is really good like that. If you want to experiment with scaling in and trying to find those points, you can use the replay tool to see where it goes back to 0 or back to 50 bucks. It comes back to 1 point. And that shows you that some traders were able to break even. And if you're flat, that's usually a good chance to, take the other side of that trade as they're leaving. So 3, breaking out above 2 bull dojis. So no bear bars as yet. So if you're buying above 1, then there's your measured move there. And that's putting a stop below 1. But these are trading range bars, so more likely that stop gets hit. But could go up. Let's have a look. Let's get out the encyclopedia. So gap ups. This was similar to yesterday. Okay, slightly different shape, but a couple of legs sideways to down, and then high 2. Maybe you could look at it this way, except we didn't wedge top. So we've got most moving to the moving average before sideways to up. Here we've got a big gap up, so bears are trying to get a series of bear bars to get a second entry short, to have a shot back at the moving average. The only one here that went down immediately started with bear bars on the open. So here we're up, but we've got tails. So that's another possibility for today, a wedge top. So I've got a target on the hourly. Measured move of that range. We're getting a breakout and follow through, so we've still got another 20 minutes. The measured move of that gap is about 15 points above. So you can see a lot of traders buying the market. They want to be long, betting that if we come back down here, they'll be able to scale in and make money. Tim, do you normally trade? No, I don't trade through TradingView. I just like it as a console to research and to muck around with. But NinjaTrader is much better for sim as well. The TradingView one's kind of just like click, click, click. You don't get the actual emotional feeling of being in a trade that's going well or going south. Some dude wedge from the Globex. Which chart from the ETH? I look at it. I look at the 15-minute and the hour, but I think the patterns are all pretty similar. I mean, possible wedge if we get a bear bar here, but also this is a pretty strong breakout. So for me, this chart's a bit clearer. It will prevent me from fading too early, and that means occasionally I'll miss trades, which I'm okay with. So 1 is a bull doji, low probability for that to get a measured move, all right, buying above 2 dojis, but still consecutive bull bars, still a gap up. But looks more like a leg in what will become a trading range later on. So we've just had a 15-minute bar, so we've got another target up at 43.80. So breaking above a bull bar on the 15-minute chart. Bull's trying to get breakout and follow through. So always in long. It's buy for any reason, but your stop is about 13 points away, far above the moving average. So currently flat. Can we just go up all day? Yeah, we sure can. Here, bear trap on the open, and then strong reversal, bears trying to cover, and then give up, which created this spike in channel. And very aggressive, very big bars on the open here, but still bear bars to keep it sideways. And then these bars are very, very climactic. If you look at the size of them compared to these bars, and that led to a reversal. And then here, it was just like no selling at all for the first 90 minutes, and then sideways. So small pullback trend. So looking like 4 bull bars on the open. Did my timer vanish? No, there it is. So that means very high probability of a bull day or a trading range day, and that will mean bulls are going to be happy to buy low and buy lower, betting that this is not going to reverse. So those bears that sold 1 and 2, that's their target there, 4378. So they sell, and they sell more higher, and they double their position, betting that this is not going to turn into a swing. So it's like, even though I'm not placing trades in the first few bars, I'm trying to imagine, okay, if I'm selling here, where's my stop? What am I looking for? Am I disappointed? Here's a big bull bar. If I buy above the high, I need 79. Okay, so that's my entry bar. It's okay, it's not fantastic, that tail, but even the pullback, it's going to be first reversal. It's all right. So I'm watching to see whether counter trend traders can bring it back to the high of 1. And if they can't, great chance on second leg up, targets above. We've now got 2 open gaps as well. I'll use a different color. We've got the gap open, and we've got a second gap here. So when the market has 2 open gaps, there's a really high chance of a strong trend. The strongest kind of trends being small pullback trends. And there's just enough sideways and just enough opposite bars to keep the other side hopeful that this is going to be the reversal, and they turn into great with trend entries. And if you're struggling with trading a small pullback trend, one way that might help is to go up a time frame. So if you look at that small pullback trend, it doesn't look that strong. But usually a time frame up, it'll be a micro channel. So if I switch that to a 15-minute chart, I can put a 15-minute chart right here. Let's get usually be a micro channel. Here we had a couple of pullbacks, but basically every high above the, so every low above the low of a prior bar. So if you're not sure if you're in one, that's a really great way to see. And then you can trade the 15-minute like a micro channel, looking to buy below the low of something. Every low above the low of a prior bar. So here, no limit order traders have been able to buy below the low. Now, some limit order traders will do this. They'll put put your trusty fib. Mine's just got 50% and it's got the thirds on it at the same time. Occasionally switching between the two of them. But you know, if you set them up yourself, you can do. You can put the thirds on like that. So you can see they're trying to get in and they're not confident that it's going to go below the low of that bar, so they'll still buy in the lower third. But on that strategy, it didn't work on that bar. It did work there. Sorry, can someone put a GIF in here? That's awesome. I don't do that. I just draw like support under my entries. On the chart, it makes me feel better. Like it can't go down because look at all these imaginary lines I've just drawn. So if you bought the close of 3, you got 1-to-1 without any emotional stress, 0 stress. Nice. So high probability, I think we come back there because the market's usually a very stressful environment. So, which is funny because we naturally think when we place an order, we should just immediately go to the target. Hi, Lucid. Great for having you. Did I say ignore? Sorry, that's my phrasing. Not like ignore like they're not important, more like just use them for observation to improve my next trade. But yeah, I don't trade the first few, or very, very infrequently. So bull spike always in long, looking like we're going to get to these targets up there. But your stop's big, and when your stop's big, then your probability is high, and so is your risk, so you get trades. And that's another way that's going to help you find always in. Generally, when your stop is much larger than you want, that's the always in direction. So you're buying anywhere in here, your stop's much further than you would like, and that means long. By the time you get all the bear bars, you could say always in short, but still above the moving average, I just say trading range. Here you've got 4 bear bars in a row at the moving average, or here, stop's far above. Thanks to Secure Freedom. Yeah, news at 10, and that's the thing. Usually, you know, you have news early in the first few bars as well. So we've got a couple of minutes. Is it ISM? ISM PMI. So bull microchannel, but sideways, breakout, sideways, breakout. 1, pause, 2, pause, possible parabolic wedge. So then we'd expect a couple of legs sideways to down. Certainly nothing to sell. We had a big bar that had a breakout, big bar that had a follow through here. That can often set more targets above. Can we do it all day? Sure, let's go. We'll break out, only buy. And even when the bear bars appear in the micro channel, still nothing to sell. Here, bull breakout, and then 2 legs sideways to down to the moving average. Oh, we've got a measured move up. That's a gap down, that's not what we want. That's gap down, down. That's more similar to what we had yesterday. Triangle, pause, bull breakout, always in long. Skakembo, too late to buy at the market now. Well, if you buy at the market now, your stop is at the low of 1. So if you're buying here, the move's already 20 points. And if you put that together with the gap, 40, 50 points, so there might not be much more upside. That's on probability. I mean, this thing could just shoot up all day, and that's the joy of trading, low probability events. But I think better to look at this as this is probably enough up to get a second leg. But the second legs on the open can often have deep pullbacks. So I'm not going to buy at the market here. There's probably a better buy around this gap. He says as the market explodes upwards. It's the trouble with calling it live. So that was the swing target for the bears who were scaling in. And we've got all 3 targets that we just rocketed through. So weak reversal bar by the close, but maybe my trading view was a bit laggy there. By the time it printed, it shot through. So that's all the targets from the bear swing target to scale in and the measured move. And I think that was the 15-minute 1-to-1, wasn't it? Yeah. So that was the 15-minute 1-to-1. If long, would you have a target here or just trade the price action? But where did you get in? What was your initial risk? What was your actual risk? I would trade off your initial position. 43.70. Yeah, so you got in. With 70. Oh, nice, high of 1. Yeah, so that was your 1-to-1 target. I mean, this is the first attempt of the bears to reverse it, and there hasn't been any bear bars. But when you're trading on the open, often one-to-one's kind of what you get. I think you don't have to rely on a stop all the way down here. I think you can rely on a stop that's a scalp size below any bar. Alternatively, if you're trading a smaller size, you can look to add on at that gap usually. We've still got 3 minutes. Still strong bull breakout above, so even if it pulls back, there are a lot of traders that were willing to buy up here. So you often get a second chance to take profits of the target, not always, but often. Lucid, I put a slide in the chat because we're super organized. Cool's asking, do you get out of positions before news bars? Yes, and I know that's, sometimes news bars can just, shoot a position, 20 points, 50 points, 100 points. But there's usually a better trade after that. Because if the news is a big bull bar and then it gets followed through, then that second leg's a higher probability. And if I'm flat and it's a big bear bar to the lower of the range and doesn't break out, then I'm down the bottom of the trading range. So I've probably got another trade somewhere around there. Overlapping here, overlapping here. So what the bears are trying to do is to put this into a trading range. And they want to get it somewhere down here. Middle of that gap. Assuming you were still short, which hopefully no one still is short, it's not a great sell signal, but you could assume, say, someone's short there, there's a bear bar, wait for something to close, and then their midpoint's going to be somewhere around here, which is around that gap. And that's why a lot of these bulls that buy here understand that the next phase is not bear spike, sell everything, gravity takes over. It's bull spike, pull back channel, and rarely does it just switch back into a trading range, in which case any bears that sold up here are already at 1-to-1 and 2-to-1 targets here. So they've got a logical place to get out, and then bulls have got a chance to get back in, at least in my view. So they've got a logical place to get out, and then bulls have got a chance to get back in, at least in my view. Seven closes on its low. Can you sell it for a swing down? Back to the moving average. Well, I mean, that's the 2-to-1 target at the moving average. I mean, fading opening spikes is a credible strategy. You only need to hit 40% of the time. Bulls are going to try and buy here and prevent that from happening. Still bull micro channel. Let's see if they sell below it. They've still got to get through this if they're selling. Nice, Kaylin. Awesome. And if that's the low probability, and that's what's great about Alice Course, if that's the low probability, then the high probability is to either be long or flat looking to get long. To either be long or flat looking to get long. So we were saying, some of you might have just joined us, we've had a couple of we've had a bull channel and we've broken out at the top of it, essentially twice. So we had a bull channel and we broke out of that. And now we've got another channel we've just broken out of the top of. So we've had 25% odds times 25% odds. So outside down bar kind of reduces the probability already, but bears will be waiting to see if they get a follow through for a pullback second leg. Some bulls will buy under here. The other bulls won't scale in below a bear bar. They'll wait to scale in below the last and the second last decent bull bars down here. Yeah, invested mind, I agree with you on the gap up with big bull bars. It's either a bull day or a trading range day. So it's on the bears to do something surprising. Something surprising. The 15-minute chart is 2 bull bars. So that gap is also a limit order buy on the 15-minute. So they kind of, all the price action stuff kind of folds in together. And it's pretty confusing at first. Every time you add a chart, it's like you got to double the amount of stuff happening in the brain. So if the bears get follow through or a couple of legs back down to the moving average, what then? Then we're trading range. Some bulls will get out a scalp size below 7. What's the average bar range? Roughly here, about 6 points. So 80% of that. So 5 points or so. Their argument being, if the bears can kind of make a scalp below a bear bar, this bull trend isn't that strong. It's probably a trading range. I prefer to be long from lower down. And if you're quick to kind of pick that up, then you'll avoid doing stuff in the middle, and you won't get kind of psyched out when you have a big bar that goes right through the middle, and what it's doing is just going to the lower third. So yesterday, spike, 2 pullbacks, and then we break out of that triangle. It's a high 2, it's a buy. Basically, wherever the bears gave up here, and then we draw a trading range. A couple of bear bars. You think, oh, that's not great. I probably don't want to be long up the top there. And then you've got a chance to add on lower and get back in. But it's tricky because that move happens so quickly. So you're wondering what to do, and then within seconds it's right down at the low of the range and ticking below it, and you're thinking, am I the right size right now? Do I just exit? Do I really want to double my position? It's not easy. So now 3 bear bars. So the bears got breakout and follow through. So some bulls will exit. Now you've got a couple of bear bars. Others have an order below that bull bar here on 5 and 6. Because we've got a close below a bear bar, probably need second leg sideways to down. I think there's actually a small gap between those bars as well. So that's probably be a level of resistance if we get up to it. There's probably sellers in that gap. Same as this gap here for the bulls, this gap here for the bears. Let's see. I don't usually like to buy into a micro channel on this time frame if I've got essentially an opposite micro channel. Probably a bit of buy. If you look at a lot of triangles on the chart, your eyes kind of make you see them everywhere, but they create test targets here. So we might need to test that 3 low. So if you're a bear on 1, so you sell the 1 high, and then you sell, let's just change that one, and then you sell 7, that's where you've got to exit. What's that? 4368. So if you sold the close or if you sold below 7, 43, still 4368. So let's see what happens there. Does that turn into lots of bulls buying? Because bears are getting out. I think we've gone below it. breakout of a bull channel often spends 5 bars above it. So that's what the bulls are fighting with now, I think. We've done 2 low probability events. Will we do a third? Currently, you can be on the short below 7, outside down, but pretty big reversal bar. Be long above 3. But now you're starting to get consecutive bars against you. So, okay to exit and look for another trade. Moving average, not too far from the 1 low. So that's good for bulls. That means we've got a layer of support at the low of the day. 2 layers of support, I should say. The day. 2 layers of support, I should say. So will this be 1 pullback, second leg down? See how many limit orders are sitting here under those bars. Pullback, second leg down. See how many limit orders are sitting here under those bars. This is very bearish, I think. 2 gaps for the bears. Is it inside? Not quite. Nearly inside. So 3 bear bars. So now this might need a second leg, and this probably needs a second leg. So some bulls will be giving up, deciding they don't want to be long with 3 bear bars. Other bulls are looking to scale in this gap. So trading range price action. Limit order traders can't get in below a bar. Limit order traders can't sell above a bar here. Limit order traders can't sell above a bar here. You usually need those kind of pullbacks to keep the move going. Kind of keeps that bottom part of the channel. That bottom part of the channel. Here kind of keeps people into the move when you've got up, pull back, up, pull back. So bears were able to scale in and avoid a loss, but unable to make 1-to-1. Depends where you draw the 50%. You can include that tail or look at the bull bars. 50% pullback, and then they're looking to get up to the highest close, or at least up to the bottom of that spike. Sometimes the market just sits in between these 2 layers as well, so they got back there. Layers as well, so they got back there. Might set up a nice high 2, but if this bar's too big, it might not get the follow through we need, because the traders that bought up there got a chance to get out and make money. So do we get up to the high close with 1 tick off? That's the high there. High's there, 77.75. Nice. Okay, so gap still holding there. So bulls still with 2 gaps, but some trading range price action. So strong bull trends don't usually have 3 or 4 bear bars in a row. So the risk with, I think someone just, oh nice, Kikembo, did you get in on the gap? I won't blame the fact that I'm talking, but it's one of my favorite entries, that one. Particularly if the 15-minute and the 5-minute line up with those gaps. The trouble with this closing so high up here is spike pullback, here's a channel. How high in the channel am I buying? A few too many tails here for me to buy there, but it does create better buys here. Yeah, beautiful. Nice one. Did you buy above 9? As it went above 9. Yeah, nice one. If you you can practice in the sim or look back at the charts. I think that I've read somewhere that traders will enter above the high of that bar, but I find when you look at charts or you're watching the intra bar, I think you can enter at the open of that bar. You know what I mean? You don't need to wait for this bit, because those traders that are looking at that are not, they don't want to see a huge tail. Basically went 1-to-1 and is now shooting back the other direction. So it's like they're ready to go. So I think that's good. So if we think about that move, pull back, sets us back up to the high. So you can see what we're talking about before, bull spike, next part of the market cycle is going to be pullback channel or trading range, lower third, and then traders ready to go there. So this bar probably too big. This probably needs a second leg, but we might get a high 2 somewhere in here. I think the expectation for those trades is at least up to the high close of those bull bars. Like if you think anyone who bought the close of 5 sits through this and they get a chance to get out, they're probably going to get out there. And then there's nothing to buy above here. So 4375.50. Yeah, nice. And that's the other side of that trade. Good one, Ted. I did similar, was it yesterday? Yeah, here. So I got long and then I got out inside bar breakout and I got out the high 17. And then I had an order above 3 which missed, and I was quite dirty about it, particularly when it got a bull follow through. And I was like, oh man, come on. And then we had outside down with follow through, and I think, no, there might be a second leg here. And then so same thing here. You measure that high close. It's usually 2 ticks, 1 or 2 ticks. And it's like if you see that, you can see that no one waited for precisely that order. They were out just before it. So then I saw 27 and I thought, yeah, I think that's okay for a sell, because then I'm selling high in what I think is a trading range. I kind of chickened out before the moving average. There's just a lot of tails down here. And the bars were reversing pretty quickly. So, oh, nice one. Invested? Yeah, wicked. And it's not clear, but if you can kind of switch not clear into, it's not clear enough to buy high, it's not clear enough to sell low, then if it gets into that, into that top third, bottom third range, it's usually pretty good for a swing. So if you're long with a stop below 1, or some traders might have a stop below 3, the bulls want a higher high so they can move that stop up. Outside bar, not great for buying above unless it gets follow through, but probably buyers below 10. If the average bar range is about 6 points, then you've got layers of support here now, because you've got a bull spike, buyers below, low of the day with a gap up, moving average. And then so even if the bears get a big bar down to here, their risk is much bigger than the expected 1 bar or so to the moving average. So probably buyers below 8, I think. That's below 8, I think. So bears that sold above 9, that's interesting. Not recommending that. So you sell there, and then you sell a swing above, and they made money. So we're kind of forming a triangle because you've got bull swings that are still in and bear swings that are still in. But easier to be a buyer right now. This is common as well. You get 4 bars in a row, pause, and then one more. 4, pause, more. Here was confusing because I got an extra one and went sideways. 4, pause, a little bit more. 4, pull back, one more. That stuff's really easy to see in TradingView because you can kind of write an indicator in about 5 seconds and have it light it up. I won't trade with them all on the screen because it gets a bit confusing to video gaming, and I find I hesitate more with it all on there. But it is really good for research because you can kind of get through 100 charts in 20, 30 minutes because it just lights up all the things you're looking for. Oh, gee, any relevance for the bear IOI? Yeah, I think it sets a couple of targets. So, sorry. So that gives us a couple of targets. And they're not like crazy targets either. We've got a compression, volatility compression, so we're going to shoot out in one direction, like the band. Either we can get a gap up from that measured move up there or down here, which is just a one-to-one of that bar. There should be buyers at the low of 10, and if not, then they'll usually scale in 1 times that bar range. Nice, so bears got back to the inside bar 2. My target was a little bit lower. I thought they'd get back to the apex of that triangle. So they've got a couple of minutes to close this gap. But we're now low in a trading range. So we're in that bottom third, waiting for a continuation signal to fade or a bull bar to get long. You can see a lot of the bulls not happy with that bear bar, another inside bar. This is going to be a channel or a trading range. I want to be lower. I want to buy lower, maybe around the moving average. So 15-minute chart. So now bear's got a couple of targets. We've got that one below the one low there. And the swing target there to try and close that gap. It's interesting that bear's got those gaps up the top there, making the buy above 10 more difficult. So we expected 2 legs sideways to down. That's a bit of a different shape. I think Al calls this one a spike and climax, with the second legs stronger than the first. Here we have the opposite. We have stronger leg and then weaker leg. Stronger leg, weaker leg. But if the bears can get followed through here, maybe pull back and then another leg. Nick Trades, does the range include the upper wick on bar 7? Yeah, I would look at both. So I'd look at with the wick, so that's around 67, and then 64. So you've got a small little band in there. Or if there's like 4 wicks, you've got 5 wicks here, I'll just group most of them. Yeah, no worries. So bear's trying to close this gap with the body. Broke a trend line, so a lot of traders will buy below that, expecting to come and test it. I'll get rid of that one, it's a bit confusing now. And I'll get rid of that now. So consecutive bear bars. And we're about a bar range to the moving average. Where are the sell signals? Inside bar, not a great sell signal. Big bar with a big tail, not a great place to sell. Triggered the swing, so you can still be short below 7, but that price we might need to oscillate around. Triangle breakout. Sorry, someone just asked to put labels on the. That's a good call. Left. That was the swing. Oh, that was the 15-minute chart. So you can see what we thought might happen up here, forming a triangle. That's what we're doing. We've got spike, 2 legs sideways to down, back to the moving average. Bears can be still on a swing, sells up here. You usually wouldn't sell an inside bar here, but it happened to work, so that's all right. Bulls would like a high 2 buy setup. It would be better if they could get a bull bar above the high of a prior bull bar. Let's see. A lot of limit order trading now. So we're in the lower third. Bears unable to close in there. I would typically not trade in here. I think someone asked the sell above 12 can work, and you've got inside bar breakout. That can often be a good sell below that inside bar, but again, it's right in the middle of a trading range. So use the close. Oh, hi, Simply Joe. So I just saw your question. Is the close of bar 10 credible short because it couldn't close above 5? Open at 7. Yeah, I would say both. I would say draw a line on this price. I think the key price, you think about these guys and girls, potentially that's the highest close. It's a buy to close. That's like 2 bars with tails, so I'm not going to use that as it's not really a stop order there. But that's the price that we come back to. Everyone's saying, thanks very much, we got back there. So that tail's a good entry for me, and I think that's sell to close if you're comfortable scaling in higher. So we probably need to find support. We've got the moving average, and we've got the trading range bars on the open, bit of a triangle, so you can see those tails, traders fading it to get back. Nick got kicked out of the meeting. I didn't realize we were kicking people out of the meeting. Maybe I don't have that button. Nick's thrown. What do you think about selling about bar 12? Yeah, I was saying that because that's right in the middle of this trading range, I would wait. Usually, yes, because you've got big bear bar, and then you've basically got a smaller trading range here now. And that's what the triangle is doing. It's like squeezing the range. And so it's only for scalping and limit orders really. Another inside bar. So bull's trying to get a high 2 for 3 bear bars. So is this 2 legs sideways to down? This looks like it needs a little bit more now. So bears would like to break below that low and get a measured move down to the open. Surprise, surprise, that's exactly where that measured move is. But the moving average is in the way at the moment, so we'll see. If Goldman Sachs was buying here, are they going to be buying here again? Not great sell signals in here, but okay to be short. But they were limit order sells, in my opinion. That's a swing sell. This is at the low of 5 bull bars, low probability. Basically an inside bar. Another inside bar. Bear bar closing on its midpoint, and inside bar. So bulls got a measured move up, looking like bears, if they can get below 1, we'll get a measured move down. But stop is far away. But stop is far away. Could you fade the high 2 here for a 2-to-1 down there? Tricky, right in the middle of the range. Probably not a bad idea. We'll try and get a high 2 buy around the moving average, but better if it's a bull bar that's forming the high 2, higher probability than over a bear bar. Yeah, that's it, Alex. They're looking for the double bottom at the moving average. But they want a good signal bar that's not enormous. So trading range should probably be exactly 50%. But that bull bar, probably better for buyers below. And bears trying to do the opposite, trying to break below that high 2, fail high 2, and then move down. So it's probably good ones to look at in the cyclopedia. Gap up, high 2, a bit more compressed. Basically double bottom at the moving average. Here we have 2 legs. Ours are a bit stronger. No. That was below the moving average. High 1. See, the high 2 worked over the bull bar. The ones at the bear bars went sideways. Same again. Wait for a high 2 in there. Similar. But that went below the moving average. So first time the bears do something. It's not quite looking for. And then, oh no, I want high 2, double bottom failed. Right. Bears have created another gap. So good for them. Bears have created another gap. So good for them. There's a double bottom that broke. It's not quite what we're doing here. That had a spike first. Form another triangle bear breakout. It's a tricky entry because it's like the opposite of a good entry. It's like bulls don't get what they want to buy and then it immediately turns down. Or if they do get what they want, then it takes off. Sideways here. Who was asking about the triangle apex? There you go, man. I got one right. Boom. They're pretty reliable. Bottom of a bull spike. And we're going sideways to down. So bears have had a couple of legs. So some traders will look at this as breakout mode. Squeezes price in the center and then shoots off. And then comes back. Nice, no worries. They're great for second entries. And they happen all day, which is great. So you might have the same thing, your triangle shootout, probably need to test the 11 low. But it's in the middle of the trading range. So lots of limit order potential sell spots. Will there be more buyers or sellers below 14? Three bear bars, expecting one more bar. Very close to this 15-minute measured move. Escort, yeah, absolutely. The open is a strong magnet. Sorry, I should have said that earlier. So 5 bull bars on the open, more likely to be a bull day or a trading range with a bit of a bull flavor to it. So that reduces the chance of big, strong bear breakout here and just keep going down, but that could also be measured move of this range down and then back up. I think if we look at the ETH, I know someone was talking about the ETH. We've got spike, pullback, channel. So it could be that's the line we're going to test, which is around about the moving average. So 15-minute chart, we've now got 3 bear bars. So 2 up, 3 down. We're testing the breakout point from slightly before market open. We had 3 very strong bull bars on the hourly chart. So probably buyers at 52 below the low of that hourly chart. I might just put that on the short somewhere. No surprise, that's at the trend line. So I put text on that. 60-minute low one in spike. Yes, breakout mode. Because it's also, if you think about the pattern and the completion, so we said spike, pause, then leg 2, pause, a bit more. That was the parabolic wedge top. And these pauses then give us kind of magnets for the 2 legs sideways to down, which is what we expect. But usually a parabolic wedge like this has a second leg. So the bulls are looking at this saying, yeah, great, pull back, a lot of support below the moving average, will probably get a bit more up. And bears are thinking, well, how many bull trends have 4 bear bars and then 3 bear bars in a row? Let's have a look. So how many? So small pullback trends, sideways. Bear trends have got 4 and 5 in a row. Here we get 5 in a row, sellers above 5 in a row. And then bull surprise. Sideways. Sideways. Sideways to down. Down. So might be more of this stuff here. I'm flat. I'm thinking of maybe a limit order trade up here. If we don't get to the moving average, often the market has to get there to test. But then if we just start getting bull bars, bulls will start looking for a harmonic of this and a test at the high. So the reason I put the limit order trades on the chart here is I want to see if they get hit or not. So sorry, that was one, and that was the other one. So the high close, bulls buying below the low of prior bars to get back. And they exit, and that becomes resistance. Now we have a bear spike. 1, 2, 3, 4. Now we have the opposite. So there should be sellers above 13. But it's not a great risk-reward trade because you need to stop above 10. Because you need to stop above 10. It might be too confusing to have more on the chart. But for educational purposes anyway, sell there and then there's your 2 or 3 points. This is what we were talking about before. You know, if the average bar range is 6 points, then bears want it to be about 6 points away from the moving average at least to sell. So here, 3 bear bars, that's good. I need it to go back up away from it to have a shot at it. Just because we haven't said the word triangle enough. They create 2 trend lines. And trend lines usually break and test. And that's what creates this pattern. We break it, test it, break, test, and then we compress. And if you see those, there's always those Forex guys on, you know, on YouTube and stuff. I've tried to just like block so many of them, but it's like, if you look at a trading video, you get all of them on your feed. and they're just like, look, you know, break and retest, break and retest. But if you look at their charts, they've got a million lines on it. Like, and marking up everything is not going to help you take a trade home. Alex, do you expect the gaps on the daily to fill? The daily gaps huge. Good question. There are. You mean the micro gaps in this spike? I mean, 4,400's the kind of logical target. Big number. How confident are you selling here? I mean, realistically, if you're selling here, you need a wide stop one-to-one of that move, which how many traders are going to take? You need a sell signal. Sorry, that was the Globex. On the daily, these, yeah, it's interesting. I mean, this is pretty strong. So now 50% of this move is back here. So maybe this gap will get filled. And then second leg, moving average. A lot of these bears would have sold at the moving average, I think, and then they got run over. But they're pretty confident they can sell back into it. Yeah, no worries. So that was the limit order short there that I had before. Comes up, tests, because you've got consecutive lower highs. So limit order traders waiting, they get a chance to sell, and that sell happens to be a bar range to the moving average. So, but if you're going to trade that way, I advise to trade small, because occasionally it'll do this, bit of a tail, you get another strong bar up, and then you don't want to be just scaling in endlessly to this great looking bull leg that's this long. So, which I'm sure we've all done repeatedly, and we're like, I'll never do that again. Breakout point, test. We never really got the high one. I mean, you can say that inside bar, sorry, it was the high two. Bears want that to be a failed high two and then measured move down. That would be to the below the hourly bar. Just feel like I have enough lines on here at the moment. I was waiting for retest the daily to buy. Yeah, and I think a lot of people are, and so there's probably good odds then that will happen, I think, because all those tech stocks, like all my alerts went off while I was asleep, and they all just, I bought as it went down for just a scalp trade, but then I was waiting for it to finish its move to go up, and it just launched past all my alerts. So I was like, you know, I've got to buy in the middle. So, which is like this one here, different shape. You get the big bull bar, but you're like, oh, I didn't actually want to rebuy up at the high. Al's pretty good at buying lows. He really waits on the daily, as I understand, for 2 or 3 bear bars and good context to buy. Like that's the stuff he's pretty good at buying. You know, 3 bear bars and then we've got bull bars. He's pretty good at that. But when you go to do it, you're like, what if we do another 3 bear bars? So who's in control here now? Bulls, bears, no one. Goldman Sachs. So we've got some bull case. Bull case for Alex. What's your bull case? BlackRock. 50% pullback. Yeah, nice. We've got breakout mode above the moving average. I think that's good for bulls. First time bears get a close below, there'll be buyers. And we haven't actually really touched it with a body either. This will pull the moving average up. How many moves back? 1, 2. So still breakout mode. Bulls want a decent bar to buy under. I mean, you could argue 14. But no touch of the moving average. Oh, g'day, Ray. Nice one. Limit order buy it, moving average. Yeah, nice. I've been like putting limit orders in and then closing them because that's like you can chat away and then you've got your terminal and it's like I might get a few of my higher ones, we'll see. Yet TOMC, the high to the moving average, I think that's what some bulls are waiting for. Because if 4,400 is the logical target, gap up with a bull spike, then the bears need to do either this just continuously, small pullback bear trend, but if they can't get a breakout below the moving average, then traders will just decide it's a trading range. Bears are not going to want to sell that low, which puts all the orders back up here, and then we race back up again. So, still haven't run a bull stop, still haven't run a bear stop. But somebody stops doing it here. Although Ali was telling me he saw a triangle that went for the entire day, but I can't get the old charts to find it. That would have done my head in. You potentially give up trading for a week or so and just be like, no idea what's going on. Tight trading range. I think a lot of traders will wait for a follow-through bar. We're about to get another hourly bar on the Globex. Yeah. So we've got the hourly is pretty bullish. You've got the Tim likes this kind of entry, the breakout, pull back to the lower third for a measured move target up in the 4,400. I don't know if Tim's listening. Sorry if I've misquoted you on that one. Didn't even get below that bar on the hourly, so I'll just put that line up there. It's a 60-minute. Currently flat. Wasn't able to get in here. I missed my sell, my limit order sell here, and then we haven't got up to my other sells. And now that we're at the moving average with the bull bar, I think it's probably better just let them go. Thanks, Lucid. Yeah, try and put a real face in here just to, show that we're not AI. So big bull bar at the moving average, gap up. Lots of reasons for traders to buy it, but also tight trading range. I think you should be, if you are going to buy it, I think you should have half a position to buy more lower, because there's a lot of sideways trading in here. So, or you wait for breakout follow through and then consecutive bull bars usually pulls back, and that's a better entry usually. Or it races up and I'm wrong, and that can also happen. I got rid of my limit sells here, but I'll still mark them on the chart so we can see what happens. I think even if you don't trade with the limit orders, you can kind of research them, put them on the chart, because they can help you see, if traders sell here, do they get cooked or do they actually make 5 points? Mate, that's it, right? Man, the yoga mats, I've got the double. I've got the double behind me. He does look like I've got more here and more there, but I've rotated them. That's the sunnier spot. It's one of those ones like you don't really have to water it too much. A lot of the plants in Taiwan, because it's so humid, it's like 80% humidity. You never need to water them; they just water themselves. Whereas Australia is super dry, and you don't water everything every day. The stuff just incinerates. So I kill a lot of plants here, unfortunately. Oh, thanks, Ray. Got to be good at something in here. Expanding triangle, how do you trade it? That looks like this, I would just leave it. But technique-wise, they're pretty brutal because they can launch from one side to the other. So if you're going to enter, you need to be able to enter and scale in. It's usually better. This is the direction of the trend up, and the expanding triangle is forming here. So you draw the bottom part, and then you're looking for buy signals down here. So I'm kind of thinking that the sell signals here might fail. Does that make sense? One side of the triangle will be the lower probability side. Let's see if we can find one. I'm like drawing in the air when I've got a chart. I could just show you on the chart. Yeah, here. So a couple ways to draw it. You can draw it there or in there. It's going to be a bit confusing. We're getting higher highs, lower lows. But we're above the 200, and we started with a bull spike on the open. So my preference would be to expect this stuff to fail as opposed to shorting up here, even though, like, you can say, yeah, that one worked. But difficult to do that during FOMC. Where's another one? They usually form on the open. So this is tricky. Bull spike, pull back to 50%, and then you got to make a decision. Here it was easier because you have bear bars up here, betting you're not going to get through the 200. And then here you have one bull bar, really. But you had to buy 1, 2, 3, 4, 5, 6, 7, 12 bear bars. Tricky. So bulls want a bull bar. Can they get it to close? Okay, well, my trading terminal says bear bar, and this is a one tick body. So make of that what you will. Yeah, thanks, Thomas. If the bias is long, yeah, exactly. You summarized it so quickly. That's great. Thanks, mate. If this was, and you think about it this way, if this was a bear spike or a bear channel, then what you're selling is the wedge bear flag, right, which is the higher probability of the wedge family. This is a bull spike. This is an ugly looking wedge bull flag, so better to be looking to buy down there. So we broke out above that bull bar, but 19, not a great entry bar for traders that bought immediately, and the traders that were waiting for 19. For some traders, they'll say, yep, fair enough, I'm willing to buy there and scale and lower at the moving average. You can see the moving average has been pulled to touch that bar, but when it was forming, it did not touch it. But we're still in this stuff, so. Ray saying my bro just came back from Taipei. Oh yeah, nice one. Love the food. Mate, the food's unreal. It's so good. They basically do their own version of every country's food. It's like in Australia, we have like, if there's German food, there's a German restaurant that does German food. But they'll do Thai style, Taiwanese style German food, Japanese style German food, traditional German food, modern European. It's great fun. I just don't know why they're not all fat. It's a real challenge here. Not many people speak English. Yeah, it can be tricky. You only need a little bit of Chinese, a little bit of Zhongwen, and then charades. Just get very good at charades. That's my advice. It will entertain strangers, and they will usually feel like they should help you. And when I was trying to stop doing charades, because my girlfriend was like, this is pretty embarrassing, like we're at a fancy restaurant and you're trying to like act out a chicken. I was like, fair enough. And then I didn't do it, and then the guy couldn't understand Zzw, and then, which is chicken leg, and then he does it, and like the whole table just lost it. I was like, I didn't do it. He did it. He got it. So it's quite funny. I can speak it, but I can't write it. Writing was just like, it's too much. She's half Taiwanese, half she's Singaporean, but she lived in Taiwan. So, I mean, her first language is English, and then she learned Chinese while doing a law degree. And I was like, I am not that good enough of a student, honestly. So, thanks, Alex. Back to trading. Awesome. We've seen 18 bars. So, have we seen the high? Have we seen the low? What are the arguments for and against, Your Honour? Bull spike, haven't got below 1. Not a lot of buying happening up here at the moment, but bears have still not had a bar below the moving average. So I think still more bullish, but it might be a buy lower situation. Bears want to get breakout and follow through below here. Hourly still more bullish. So this is the RTH. So I said this morning, I thought if we broke out, we might have to come back to that channel. And if we go to the Globex, very strong bull spike, tested the breakout point. So not a great sell signal for the bears yet. So there's still got a bit to do. 15-minute chart. So 15-minute, we've got a buy signal, but outside bar, so we might need to do another one, or they've got 5 minutes. So expanding triangle. Bears still on that swing. They want to get to that measured move, which is a breakout from the ETH chart. You want to see the DAX traded in? Yeah, I think so. It'd be good to have a Euro session as well. Yeah, that'd be great. Tim trades a lot of DAX. I do a little bit of DAX and mostly FTSE. So I'll split that. No, 50-50. So someone asked about trading. Do I trade all night? No, I can't. I've got to be fresh, otherwise it's just hopeless. I don't trade the Asia session at all. So I'm only trading Euro, which is 3 p.m. here for a couple of hours, and then I trade in the evening for a couple of hours. So, and it works well here because in Australia we kind of get up really early, like 6 in the morning and stuff, go and have coffees, go to the beach. Like it's very much the culture. Here, no coffee shop is open before like 9 a.m. or 10 a.m. It's hilarious. So there's nothing to do up early. But everything's open at midnight. Like I can go and see a movie at 3 in the morning if I really feel like it. Go and see The Equalizer 3. That'll help me get to sleep. Ray, I agree. Yeah, one market. Sometimes you can get smashed in both markets, or you make a mistake early and that just carries through. So yes, Asian session is the worst. But like when you learn, I was learning trading in Australia, and I just thought like, I'm a bad trader. I mean, I was a bad trader, but I had good luck. I mean, this is what the whole session looks like. Good luck. So bull's trying to get this high too. 21's a better candidate than 18. They want a high 2 above a bull bar, but also, I mean, look left. They keep getting a buy signal above there. So these limit order traders making money. It's a shame I should have deleted that. 70 solid. That was 7 points. Should have kept that one. I thought 9 was the high one, and then 15. Yeah, Lucid, I agree in principle, high 1, high 2, but what I said was for it to be like a high 2 that people want to trade, then it usually has to be a bull bar that is the high 2. So I was saying, you're right, like a high 2 that I want to get involved in. So bare outside bar and then not great follow through. That's expected. And now the bulls look like they've got another bull doji, so probably more buyers below again. So trading range, disappointing. Got the bull bar. Will there be more buyers or sellers above 20Y? Probably 50-50, I think. Expanding triangle. So what I was saying earlier is if you buy up here, you've got to be willing to buy again somewhere down here usually. You know, so say you bought the high 2, Lucid was asking, you bought the high 215, then you need to be willing to buy 14. You see that? That's a good point. It's not the right one. So you buy up there, and then I think you should be willing to also buy below that bar, which is what a lot of traders did. And they didn't get follow through. So then you can do that. You look at the leg, so 17, 18, lower third. So if you bought the 18 close, expecting the trade of the day, you've been put under a bit of stress. It's about back at your entry. Tom, TMC, is bar 21 a good or bad signal bar? Who for, my friend? I mean, it's a bad signal bar in general because it's a doji, but context is above the moving average. So it's not a great sell below 21, but it's also like not an excellent buy there, but probably more buyers below 21. I think. Yeah, Al took 10. Oh yeah, someone was asking about profitability. Yeah, I mean about 6 or 7 years. I mean, I was dabbling in an environment where it just crushes dabblers. And then when I started actually putting in the work required, you know, like you trade and then you mark up your trades and then you look at the mistakes you made. And you get in the sim and try and replay it. And then you do some research and then you watch the videos. And you just like, I was just looking at charts endlessly, but I wasn't really looking for anything in particular. So I started writing up drills, which I shared on one of the sessions. I've got like a small list here, but I've got a better list that I'll put together. But it's just only in language that I would understand, so it makes it a bit useless. But I started getting these drills, and I was like, okay, I'll set a timer and I'll just go through the chart and I'll mark up different areas. Okay, I'll put boxes around market structure. Where's the spike? Where's the pullback? Where's the channel? Where's the trading range? Here's a breakout. Here's tight channel, broad channel. How many legs? Leg 1, leg 2. Here's a two-legged pullback. The pullback breaks a trend line. Just itemize them all and then work through each one until it like becomes automatic. Kind of like, you know, I love sport. You know, when you warm up to play sport, you kind of get your eye in. And then I just found that I would go into the session, I would just make a lot less mistakes. So I'm working on an Excel list at the moment, trying to make it simple because I'd like to just put that on the Discord for people so that you can just like, you know, you get one of those repeating timers. I've got one called like Insight on here. You can set it to 2 minutes, 5 minutes, 1 minute, and it goes ding, and then you go to the next one and you're like, feel it. That really helped me. Seems a bit like dumb in a way, I know. It's not like some advanced, you know, trading secret. It's the old rote learning worked for me. So trading using your line charts. I haven't done. I mean, I can switch it on. I haven't actually tried to trade it like this, actually, to be honest. So I can't comment on that one. I've tried the bars because I thought that's what people use, which was just ridiculous. I just could not read them. And Ray's got the other tip. That's the other one. Just not. I felt like in order to be a trader, I've got to be able to trade every bar. Like the more you learn, the more entries and setups you see, and the more signals that appear, and then. But most of them are like 50-50 anyway. So, and that was something I messaged Al, and he was like, resist the temptation to trade more setups. Just take the ones that you're very comfortable. Because I said to him, like, I'm better at trading this and not as good trading others. And he's like, well, don't try and push yourself to trade things that don't suit you. Just wait for the times when it's in that zone and then trade those with a heavier size. And, you know, it seems like a simple piece of advice but made a big difference. I thought I had to be able to, like, you know, trade this up, down, up, down. In this environment, there's no need to be selling. You know, you buy and then you wait for high twos. Like we could be in this to get that, or it breaks out and forms a trading range, and then I'm in a trading range. There's a lot of sitting around, just kind of being patient and enjoying the show. Bar charts are useless. Don't quote me on that. I'm sorry. I can't trade them. I'm useless at it. Very lonely, the guy's buying the close of 18. A bit lonely up there, isn't it? This is the infamous diamond pattern. No, I don't think that's a real pattern. Still breakout mode, probably waiting for a higher time frame, I'm going to guess. So we triggered a high one on the 15-minute chart. We had breakout and follow through. Do we need a two-legged pullback? Oof, another half an hour of this. It's going to be tough, isn't it? Still on that sell signal for the bears. So if we were always in short, this should resist getting broken and roll over. But if we're still always in long, then we'll just continue working through it. Hourly bar trading range with a big top tail. So if that's your trading range, then 75 up there's probably a better sell if you're trading the hourly chart. Rose is a superstar trader. She's very good at staying calm and talking through how to fix her trades. And I think that's very good. That's a skill I can certainly improve. Some days I'm more fluid than others. I can get a bit too invested in what I think is a good trade. So when it doesn't work out, I'm like, someone's asking tips for learning the various probabilities of setups. Well, there's only 3 really. 80% of days, 80% of the time, something like that, is sideways. And so that means 50-50. And if the market's 50-50, then you need to be going basically for swing setups. 60% setups are the ones Al always talks about in his books. So above the moving average, we've got bull bars closing on their highs near the moving average. So 18 is an example. And if 23 closes on its high, 24, consecutive bull bars, then those are 60% odds. And at 60% chance, it's going to go 1-to-1 before it hits the stop. But if your stop's far away, the easy way is if the stop's far away, then the probability is 60. And if the stop's really close, the probability is probably 40. Which is why this environment here is confusing, because it's kind of equidistant the whole time. This environment here is confusing because it's kind of equidistant the whole time. If that helps. Alco, you got to add 24-hour time frame. Oh yeah, that took me a while. I was like, well, it's a bit of a deficiency in the platform. I like for limit order trading, I like spike termination trades. So you have a micro channel, and then the first bar to go below the low, and you draw a line, and then you get a bear one, and you draw a line. And if you can avoid getting confused, they create like just an endless amount of entries to get in. Break, sell, break, sell. Another one here, break, buy. But once they start getting very small, it's better to wait. So is this a bull trap? You've got big risk here, and now you've got small risk. Interesting. That's interesting, because usually the second entry would have, it's got to have, if it's higher probability, it's got to have higher risk. But here it's smaller. So interesting. It's either going to fail magically or it's going to shoot up. Let me see. It's probably 55% the bulls. Where's this? Where's the trap cell? That's not a great example. So you're looking for a second entry that's both better price and lower risk and a higher probability. So you can't have all of them. I think, see here you've got second entry, bigger distance, higher probability. That's an inside bar, it doesn't count. That's an inside bar, it doesn't count. Here's second entry, bigger risk. I failed anyway, so it doesn't really matter. Oh, thanks, Tim. Trading the, what's he got? Is that DAX? It's not DAX. So we broke above 23. Bulls don't have a new high. Bears don't have a new low. Where do you put your stop if you're buying here? 21, probably 17. But it's got to get through a couple of roadblocks. So we've got 35 seconds to go. 23 was the signal bar. But it was small risk. So good chance of going below 23, I think. So in 30 seconds, we went from a semi-bull bar to that. Well, some traders say, yeah, we've got bull bars above the moving average. We just went always in, pull back to get long. Or bears say, no, we think it's a double top. Now the bears have got a bear trap, second entry, smaller bar. Still breakout mode. Yep, still in the expanding triangle. We're also at the mid of the day. If I put that, this one, turn that one off. This one on. Okay, so we're back at the bears sell. It's a low probability sell. So what's going to happen to them? Let's see. But we might fail at this inside bar. Let's see. So we're in the top third. How many bears are going to take a swing short from there? Good bar for the bulls. Strong break above there. So we've got to get through this inside bar, but that's pretty good bar. I was one of the lonely people on 18 who bought the close. I just was sitting through it, just going far up. I just bought the high of a bear flag. I was happy, Rose, when you said you got in as well. And I tried to scale out, but I was like too busy looking at it on the chart. What happens now? We've got 2 minutes. If I'm a bear, do I want to sell 25? Big bull bar coming off the moving average? Not particularly, but I'll be interested in the follow through to see if there are sellers. So we're selling at that spot. So traders are saying sideways, no, you're not going to get your targets bulls. I'll put a stop there, and that would be my 2-to-1 back there, and I might get more if it rolls through. Problem with that argument is no bars below the moving average. So if this is a spike in channel, I think it's easy to see on the ETH. And that's the channel line. Easy to see in hindsight. That would need to break through, test. Tim, do you meditate every day? Almost every day, not every day. More like I like just sitting quietly. I don't kind of overthink the meditation too much, but this is such a mental discipline. I find like I've got to train, I've got to go to the gym and, you know, I've got to go on trails and stuff, because like more screen time does not equal more profit for me. There's like a, what's the word? Economics? Decreasing returns to scale, whatever it's called, you know. There's a point where if I trade any more than 6 hours, they're usually worse entries. So I think, you know, quiet time kind of helps that. Diminishing returns. Thanks, mate. Glad I got that economics degree. That was useful. For some reason, I thought there'd be cuter girls in there, but that was also a mistake. So good bull bar at the moving average. So not an obvious sell signal, also a big bar. So some traders, instead of buying the close or buying above the high, might wait for pullback. But it looks like we're low in a channel. Bears are trying to get a sell signal here, but not a great bar to sell, I don't think. There's no chapter in our book saying wait for a big bull bar coming off the moving average, closing on its high, and place a limit order to sell above it. But we're back up at the high close. So what would be interesting is if the bulls can't get any buyers above here. They've had a couple of shots at it. And you can see the hesitation. Can the bulls get a follow-through bull bar here? If they can get that, better odds are going to test the high of the day. Someone was talking about 18 bar range, high, low of the day. And what was good for the bear case was 7. 11 wasn't great because it was a inside bar, but 7's a decent swing point for the bears. So if you sold 24, let's say you sold 24 double top, and you're thinking, oh no, you get 25. That happens. Yeah, ugly entry bars. What do you do here? Do you keep scaling in? For me, I would not. If my entry bar is like the total opposite of what I want, like there's good surprise and bad surprise, and that's like a very bad surprise if I'm short. Didn't trigger below the low. There's probably a tick gap there, potentially. Well, there's no tail anyway, so I had no bear friends here. And if you sold above, you're hoping in the last 2 minutes of the bars you get back to the top of 24. Or the sell on 24 as in sell the close. So, you know, waiting for the last few seconds and bang. Lol, Brad, would you buy under here? Some traders would, I would not. Yeah, he's good like that. Because he's quite logical the way he talks through the entries, and which is something Al does as well. Like just step by step, kind of gets that rhythm in, and I think that's really helpful to talk yourself out of a whole bunch of signals that are not worth taking. Yeah, I know what you mean. What did Al say last night? It's like, should you sell under? It's one of the first bars. Should sell under 17. He's like, no, you'd have to be an idiot to sell under there because it's like a bull micro channel. It was so funny because like, I think he's become like more direct and clear. I like his delivery. It's funny. It's saved me from taking a lot of dumb trades. Mate, 4 hours in a trade scaling in. Have you? What I liked, I read Trader Tom's book, and he's put a chart up there, which I remember he posted his Telegram years ago, which is like him shorting a small pullback bull trend, like just endlessly, like all morning, and then just taking a huge loss, and then buying a small pullback bull trend all the way down. I thought that's pretty cool to put that in your book, because he's like, I look at this chart frequently just to remind myself I can basically do the wrong thing all day. And I was like, it made me feel better. You know what I mean? I was like, I've also gotten 8 losses, 15 losses in a row, taking the same dumb entry just repeatedly. Yeah, it was yesterday, Sharp, wasn't it? Yeah. You'd have to be needed to sell it. Just like, okay, yep, shouldn't take that reversal. Okay, fair enough. So big bar, a little bit of follow through. I think that's probably enough maybe for a scalp. I mean, it's not great. You can also say unable to close above 5 and 10. Lucid, check with Sharper on which bar. I thought it was in that micro channel, I think. It was somewhere in there that I just remember laughing. It's very funny. There's someone in the chat who like timestamps the webinars. That would be a funny timestamp. That would be very funny. So we've got gaps. Bull's starting to get a little bit of momentum here. Not great follow through, which is okay because we're still kind of going up in this channel. If this is going to be a small pullback bull trend, then we need to go up a time frame, and we should see this. So we've got consecutive higher lows. So it means selling is going to be more difficult, but we've still kind of got to get through all this resistance area. Is there a chart that makes it more simple? Not really. Inside bar on the hourly. So that means there's another layer of support under the inside bar there. If 27 is a big bear bar, can you sell it for a double top? I don't think it's worth it here. I think with all the consecutive higher lows, there's a risk you sell at a point where bulls decide they want to get in. You might have, because it's a trading range, so you have limit order traders selling above, bear limit order traders selling above bear bars, hoping they'll get back, scaling in higher. Selling there, selling more, we just touched it, hoping we get back. I think a better strategy is to mark it up and then look for a limit order in the same spot. If you're going to fade a trend, you have to trade very small and scale in. Yep. I mean, that's the thing, and it's like you feel like you're small, feel like it's small. And then, it gets a bit top heavy. That's why micro channels can like crush you when you try and trade them, because you don't want to miss it. So you get tagged in early, and then you've added in, so now you're really top heavy, and you're like, oh, actually, you're counting up the points, you think that's actually a lot, and then you get a big bar down here, and you're thinking, oof, do I really want all of them to get hit? When this is the point where you should actually be much heavier. So I do scaling with the thirds. So my limit orders up here will be much smaller, so that they get heavier as it gets lower to the ground. Let me give you an example. Yeah, so here is a good example. So these are not really strong enough to buy, and that's an inside bar. So 17 is okay, but then if you keep buying up here, by the time you get down here, it's too heavy. So I have a different size for it. This one's like full size, down in the bottom third. I'm not sure how clear that was, but would 21 be right shoulder or the left shoulder? I know what you mean. Inverse head and shoulders. Yeah, I get it. So 21, I would call that the shoulder. It's tricky because in this stuff you can kind of just like see patterns. Almost inside bar, outside bar, still running along this channel line. So you can see traders selling here, but how many points are they able to make? 1 point, 2 point. Three consecutive bull closes. We've got bull bars closing over a bull bar, which we haven't had before. So either we get pullback second leg, or maybe theirs will give up and we can go up to my targets. That'd be really nice. I normally just mute Al whenever I'm about to do the opposite. Yeah, that's tricky, man, because you're listening to him and then he's like, I don't think it's a great sell. And you're like, I just hit sell. I do similar. But, I mean, we should be able to trade without, you know, the getting affected by that. At 8:02 a.m., which is that 10? What's the conversion? That's a really good point, Silver Stacker. Thanks for raising that. Yeah, on big days, at the moment it's okay because the days are 50 points tall, and the average bar size is 5 or 6 points. Swings are 15 to 20, so it's kind of manageable. But if you go back to the start of the year, go back to last year, and you find bars that are 17 points tall, then all of a sudden you need to be able to trade different size. And so micros is a great way to do that because you can scale in and out, a bit more flexibility. Scale in and out, a bit more flexibility. What do you do here? Well, we've got consecutive bull bars. We're always in long. This is an important bar for the bulls because we got 27 is the highest close of the day, but the last bull bar on 10, I think it's important we close above that. But if you're a bull, I mean, your stop's essentially still below 1. And then we had a trading range and we had a higher low and we kind of broke out of this trading range. You can say high 2 buy, so maybe this stop's 21 or 17, but the distance from 1 to 17 is 2 points. What was my entry? Was the close of 18. I bought looking to scale in lower, and I had an entry there, and I was too busy yapping. What I would usually do is wait to see if we get there. Sometimes if it's like a really clean bar, you never get back to that kind of obvious entry, and so you can kind of slide your order up and get in. So I'm only on half size, and then we had a good 25 was good, but I thought, it's like one of these trends where you're waiting for something lower to buy, and it just keeps moving up. So hopefully it's going to go a bigger distance. You've got inside bar, outside bar. I mean, we had 4,375. 25 points, big round numbers, sometimes, but I think the more important number is 44. I don't think we'll get there today, but you never know. Big spike on that on news. If we put the ETH on, let's just do this for a bit of fun. A measured move of that bull spike. Where does that put us? What a surprise. Tim's probably going to say, I told you so already. But full spike, measured move. There's probably a few ways to draw it, but that's one possibility. This 3 bear bars, you don't get this in very strong bull trends, so more likely to be a channel, so there's probably going to be sellers there. I have to guess, I would say There's probably sellers there, probably sellers. Get rid of that. So I'll make that red. So it looks like we're going to go up and test that. So will we get a new high today? I don't think it's going to be a 20-pointer. I think it's probably going to be a 15-pointer. That's my guess. See what I told you I do that. I kind of draw stuff on the chart to make myself feel better. Like measure out targets that are exaggerated. Nick's saying I'm long from the moving average in holding. Yeah, that's brilliant. I think it's better just to trail the stock up, you know, have a scalp size below any bar. I mean, in theory, obviously the stop is down the bottom of the swing point, but the average bar range is pretty small, about 4 points. So 4 bull bars, and now we've got a micro gap, sorry, tick gap. So might pull back and test that gap. I don't think there's any other gaps in there. Oh yeah, there. So that's not what I want. That's what I want. So I think that's a measured move of 18. If you've got long at the moving average, maybe you guys are the ones getting the, sorry guys and girls, getting the 20 points. Okay, well your 20 points like the 7 high. Can we get a high of the day and get a measured move? I think, well, this is pretty strong now. Even though we're hugging that channel line, this is pretty strong to expect some kind of second leg. The price action at the moment doesn't look like huge explosive trend, relentless, like a rocket ship. This looks to me more like we'll do 2 of these, like a trending trading range, but then that could be up there. If we get a big acceleration bar on 29, will I close or will I hold? Questions. It's the trader's question right there. Well, I mean, there's nothing to sell yet, so I think I'll just leave this on. Bought above the 14 high. Oh, yeah. Bought above the 14 high. Oh, yeah. Oh, nice. Well done. Good on you, mate. Let's wait to the moving average. 1R. That's how you do it. Tim, do you see divergences? I tried to kind of study them and put them on my chart, but I just ended up not taking the right entries. I was like looking for divergences. Yeah, it kind of did my head in. I wish I'd. A friend of mine uses them really well. He trades like a 1 minute chart. So, and he was forever saying, yeah, because it's, you know, pointing out a divergence when I show him a chart, and I was like, man, when I try and use them, I just I get a bit confused. So that's the 1-for-1 target. Usually when you get 4 bars, you get kind of a test, like a pullback test. We've got an extra one, so we might need to test this gap. We've had an outside bar and follow through as well, so you get a bull bar with a big tail and then a bit of a pullback and then shoot past. There's bull spike, big tail, shoot past. It's kind of rare to see the tail go a lot above that bar and then reverse down immediately. Big tail, pullback. This, I'll cheat and say the context was probably shouldn't have got there to begin with. That was pretty fortunate. But trading range, so disappointing. I think okay to get out a scalp size below any bar. Bears want to break that gap and get back to this kind of tight trading range in here. but no sell signal. So probably first attempt fail and a little bit more. Let's see. Closing the business for the week. Good on you, Ray. Very nice. What does Tim say? Sit back, get some popcorn. It's a really good way to learn trading, rather than always having your broker terminal open and then you're trying to get in and out. Oh, you're far out. It's Friday. That's the problem with working at night time. The days, they blend. So no bars below the moving average. That bull bar is touching, but at the time we were chatting through it and it wasn't. It got pulled up underneath it. We're always in long. I mean, for some traders, we never went always in short. I mean, we probably got into a trading range in here, but difficult to sell here. I mean, you can say bear surprise, second leg strong, one more bar, short. We had a triangle on the open, breakout, two-legged pullback, test. Then we got expanding triangle, and we're still kind of thrashing around the upper edges of this. And this pattern we're doing on the 5-minute, we're doing on the 1 hour, and we're doing on the daily as well. So, and you can see, you see that little tick gap there. They're really good limit order entries. Now you don't always get them. You can see another one here. So there were more buyers at the 11 close. They got stuck, came back, and that was the sell. So it's pretty easy to write a little bit of code to show you in TradingView. You say the close is not equal to the open, and it'll just light them up. What was my measured move? That's my measured move here. So I took some off there. My concern was this stuff in here. But now that we've got so many bull bars, probably a pullback from this is going to fail. So the measured move, I thought the measured move of the gap just above the 7 high. So many lines. That can go. That was the measured move. That's gone. That gap's being used. Can bulls get a measured move of this whole piece? That was the other one I think I drew up. That whole piece here. It's above the market. Sorry, it's above 4,400. But be surprised if it just blew right through there, 10 points. Maybe. I'll draw it up. I was a bit more George Costanza about this breakout because there's so much of this stuff here. I could be wrong. Could be wrong. So, how do I better control myself when my gut is telling me to YOLO? Yeah, it's an excellent question. A couple of suggestions. One is I think the Ali Moinafshari approach, which is become systematic and find what you like to trade. For example, if you like to trade micro channels, you're trading a micro channel looking for a second leg, okay? Or maybe you're trading a second reversal. So first reversal, second entry short, whatever the entry is. Go back and get out an Excel sheet and mark them up and then take a look at all the different variations. And so you actually really understand the entries that you're good at trading and all the different variations. And that gives you this incredible confidence on one hand, but also this, like, what's the word? Being stubborn. Try to find the adjective, but stubborn is the adjective. You become very stubborn, like, it's not good enough. Which is why I sat through a lot of this. Here's a micro channel. I say, I don't like to buy an opposite micro channel. This is no good for me, even though I could have got a scalp there. And then here's a micro channel with an inside bar. I don't like to trade that. Prefer to wait for a high 2 or a good bar to scale in. You know what I mean? Selective, discriminating, yeah. Because it's a bit heartbreaking when you trade really well and then it's like that last trade that you scale in, it's a big loser, and then the day ends up being a loser. And you think, I did everything right except for literally 2 clicks, or 3 if I scale it. You know what I mean? That's annoying. So try not to blow accounts. Yeah, try not to do that. My brother rang me up. He's like doing some trader program where their homework is to blow an account. They get like a $200 account and you either double it or blow it up. And I was like, that's straight up the dumbest thing I've ever heard. It's like you're conditioning your mind to max out your capital and decimate it. I mean, unless I owned a prop firm, then I think I would definitely advertise that. He's like, yeah, I'm trying to get a 7-to-1. I'm like, I can't remember the last time I got a 7-to-1. I think I got it by accident. Yeah, that's his course. I think I stopped him doing the course. I couldn't remember the last time I got a 7-to-1. I think I got it by accident. Yeah, that's his course. I think I stopped him doing the course. My goodness. It's just like Macau Casino. Yeah, mate. Put it all on diamonds. Put it all on clubs. So, I don't know. It kind of worked both ways. Yeah. So, I don't know. That's my advice. I think ask Rose, ask Tim, ask Brad. It's a really good question. And I'd like to hear everyone's answers on that one because it can be hard to sit and do nothing unless you have those entries which I really like. Like these ones are like I like this kind of entry because it's one that Al always goes through. You know, wait for big bars to the moving average. And even when they fail, like there's one here. This is FOMC, so you can ignore that, but you can buy below that spike. So you got bull bars in a bull environment breaking above the moving average, there's buyers below there. Environment breaking above the moving average, there's buyers below there. Where's another one? Consecutive bull bars above the moving average. It's like you just wait another hour. These work, so you buy here, and then you're looking to buy lower, it never got triggered in. So you didn't lose any money there, you didn't make much. And if you held it, you made money. So yeah, Ali's he's got stuff on his website, but he's got some really good YouTubes. And he's got like courses and stuff. And yeah, he goes into a lot of depths with Al's material. So yeah, read broadly. I think it all helps. As long as you're not blowing $200 accounts. No, I didn't take his quant course. I wanted to do like a weekly call, but it's at like 3 a.m. my time, and I would be rubbish at that. So, which is a shame. But I have watched a whole stack of the videos. Good stuff. So, oh, good one. Nice. It's 12 o'clock. Chatting. Okay, so what's happening for the rest of the day? Well, bears have got a reversal up here. A lot of trading range price action. Bulls would like to break out of this, but they never got a higher high. So in theory, your stop's still below 1 or 17. You can argue bear flag, double top, failed. I mean, in theory, you're not going to let your stop get hit below here, I wouldn't think. Even here potentially, but 4,400 is the big number. We might not reach it this week. I thought on the weekly chart, we've kind of already done what needed to happen. That was the touch the moving average on the weekly. I feel like we might have done what we needed to do. We didn't trigger the buy here, so there's less reason to get up there immediately, but very strong signal for a gap up on Monday. I think buyers around 4,300. You know, if you're a bear and you sold above that, you're not liking this one too much. But it is the first touch of the moving average for bulls, so it might be a break, come back, leg 2. Yeah. So that's for me. So I'm gonna jump out of here. I don't think anyone's after me on the room. Everyone's at the beach. Tim's getting a tan. Rose is getting a tan. Brad's getting a tan. They're all surfing. Yeah, awesome. Thanks for joining. Thanks for your questions. Thanks for your participating. If you've got any other questions, feel free to shoot them across. And yeah, thanks everyone. Don't be afraid to take Fridays off. Friday afternoons can be tricky. Awesome. Nice one. Nice. Yeah, I can surf in Taiwan. It's not quite as good as Australia, but still pretty good fun. They don't really like swimming, so there's not too many people out there. Awesome. Thanks everyone. Take it easy.